Hey guys, we are here for a second panel, which is on why DeFi is a viable alternative to TradFi. To host this panel, we have a dear friend Samir Malik, who used to run the US Embassy's Nexus Incubator in India, and now is a partner with King Asset Capital. And he's very bullish in the crypto space since 2016, one of the early OGs. So over to you, Samir, to introduce the panelists and the panel.
Thank you, Manav. Great to be here. This is Samir. I am partner at Chain Assets Capital. We are onboarding the next set of founders, people to invest in Web3 companies. And we are great to have a panel today where we are discussing whether DeFi is a viable alternative to the traditional finance, right? And we couldn't have asked for a better panel where we have Sanat from Spartan Group. We have Amitesh from Stater Labs. We have Venkatesh from Pontoon Finance and Achal from Spadium Finance. Unfortunately, we don't have much time. Welcome to all the panelists. I think what we'll do is like I'll give you 5 minutes to introduce yourself and share initial thoughts on why DeFi is an alternative to traditional finance, and we'll go from there. I think we can start from Amitesh. Are you here?
Yeah, I'm here. Thanks
Please
a lot.
please take the stage. Thank you.
Thanks a lot, Samir and Manav, for having me here. And thanks everybody for tuning in today. Pleasure talking to you guys. Quickly introducing myself, I'm the co-founder of Stader Labs. We are a multi-chain staking infrastructure provider, currently live on about 4 blockchains with $900 million of total assets staked on our platform. Formally started in June last year, and kickstarted our journey on Terra blockchain and expanded to Phantom, Polygon, and Hedera right now. So I think the topic today is quite interesting. Can DeFi be a viable alternative to traditional finance? Uh, I think, I mean, my response to that is like that's why we are all here. Of course, it can be a lot more than just being an alternative to traditional finance. Reason being, I think I probably go back to the reasons why I felt crypto and DeFi was exciting, because I come from a very traditional Web2 background where I was working with Swiggy as head of special projects and transformation, and never even got into crypto space before November 2020, right? So three reasons why I felt crypto was going to dramatically change the landscape across the industries was one, the composability and the transparent ecosystem that was being built, right? Like everything was open sourced. People can build uh, people can build on top of the existing applications and also collaborate very easily across any kind of application that was being built. So that's one that typically doesn't exist in traditional finance. Traditional financial systems are extremely closed, and even if you have to build an application on top of, let's say, an ICICI Bank or an HDFC Bank, I'm just giving you examples of Indian banks because the audience here would probably be familiar with those. You need contracts. You need to go through a lot of hierarchy and approvals before you even consider getting access to reading the systems, right, or understanding the architecture of the systems. So just crypto turns it upside down. So you don't need anybody's permission to actually go and understand what's going on, what is the architecture of the system, and what to build on top of that. And the second reason is it's borderless. It's not limited to, let's say, in India, where Indian DeFi applications are being built by Indians, or similarly, European DeFi applications are built by Europeans, right? It's actually global right from day zero. What that means is now you have extremely highly talented people across the globe working on building these systems and improving them, and doing it at a rocket speed. I think it just tips the odds in favor of DeFi to multiple times, right? Then the third reason I believe uh, is because now it's not it not so traditionally you see financial industry as like serving financial applications, right? Now in crypto, you have these agglomeration of different sets of applications, right? Like people are already talk. I mean, people have built applications on financing NFTs, financing, financing invoices, etc., and even more financing art, while everything being on the chain, right? And this aggregation of these things at the same time, how do I put it? Like so the way all of these applications are coming together on top of financial app or decentralized finance applications is just going to explode the entire industry uh, to several notches from where it is here. So I definitely think it can be much more than traditional finance, in my opinion.
Thank you, Amitesh. And just to share one fact, like just to see the exponential growth of the DeFi ecosystem, I remember at the start of 2020, the total value logged of the entire DeFi was 500 million, right? And what Amitesh just shared is their platform launched 1 year ago. They have a TVL of 900 million, right? Just one protocol, and the overall ecosystem has grown to 220 million, 220 billion dollars plus, which and it's hard to see that it's just been 2 years, right? So thank you, Amitesh. I think we'll move on to Venkatesh. Do you want to share your thoughts on the same and introduce yourself as well?
Hey, thanks, Sami, for that. Yeah, myself, Venkatesh. I'm the CEO for Quantum Finance. Entered crypto close to end of 2017 as a small-time trader, and then understood the in and outs of the DeFi and the ecosystem of the blockchain, understood the Web3, and then started to become a CEO for the Quantum Finance. So, what exactly is a Quantum Finance? Ponton Finance is a one-click liquidity mirror solution across the chains, which tries to solve the concern of the fragmentation and the composability issues that are the ecosystem. Now, coming back on to why DeFi is viable an alternative to traditional finance, we have multiple aspects, as Amit said in the earlier thing. So, adding to that, when we look at the traditional finance systems, we have multiple things that are coming across on a day-to-day basis, where it requires a multiple approval process or an intermediary requirement. Just like a government offices, any work has to be done, you have to pass on to an intermediary persons to get the things done. When if you can completely understand on the DeFi side, it's almost or exactly opposite to that. You don't have to do anything. You are the custodian of your asset, you are the custodian of your wallet and other stuff. And also the processing part of each individual aspects when taken into consideration, say, like lending or something else. In a traditional finance, it's very much difficult to get you until unless you don't have your civil scores or you don't have your uh, the required numbers to get it processed. Wherein in DeFi, that's not the case. You use your wallet, you process your transaction, you get the loans in a flashy, just like this. So that's how the entire way of understanding and the change in the environment has led to a decentralized finance to go up to a very high level. Apart from this, we also have the aspects that build comes to the security aspects as well. From a traditional standpoint, this is very much secured enough, but in a DeFi environment, we are still looking and leveraging the aspects of the security and the risk associated to this.
Thank you, Venkatesh. I think you're solving that problem where we say in DeFi that people in traditional finance don't want that to be easy to go from one bank to another, right? They
Yeah.
don't want it that okay, one bank is providing something and it's very difficult to go to the another bank. So I think you're solving that problem, and it's great. So I think taking that I think Spherium Finance is also trying to do something along those lines. So, Achal, do you want to take that up and introduce yourself and also share your thoughts on how DeFi is becoming a viable alternative?
Yeah, hi. So I'm Anchal. I'm co-founder and CEO of Spartan Finance. I've been in the space of blockchain and DeFi for over 5 years now. Before this, I've been in IT and finance related applications for over 10 years. So I've been in this industry for a very long time. DeFi as an industry is especially interesting for me because I feel that it is at an intersection of technology and finance. And when we talk about whether DeFi can actually replace traditional finance, To be honest, when blockchain came into existence in 2008, the reason was that Satoshi Nakamoto wanted to actually give a viable option to people to be able to transfer value without any intermediaries like banks, because there was a big financial meltdown which was created by these banking or financial institutions. So, but Bitcoin in itself cannot actually replace banks. It has to be done by decentralized financing ecosystem, which can be created using the applications which are being built. In the current state of things, I don't think that we are replacing banks right now, because the applications are too difficult. They're all working in silos. There are so many chains. There are so many applications. People lay for a layman. It is very difficult. So what we want to do is we want to create an all-in-one DeFi ecosystem which is cross-chain interoperable, so that, and I really don't want to throw these difficult terms also in front of laymen. We just want to tell that whichever chain you want to use, it's okay. I mean, you can just come to Spherium Finance platform and use all the applications for whether it is for staking, for swap, or whatever finance has to offer. So DeFi is a viable alternative. That is the reason actually blockchain came into existence. We are still very far from where we have to reach, but yes, we have started very strong, and I'm sure that in the next 5 years we'll see DeFi. If not replace the banking ecosystem altogether, banks will adopt DeFi, is what I feel.
Thank you, Achal, and thank you for playing an important role to do that, right? And I think moving on to our last panelist, Sanat, you would have a special overview of the entire industry, right? Because you are with the Spartan Group, which is the largest advisory in Asia, and you must be seeing a lot of solutions. So, what do you think? If you can introduce yourself and of course share your views on the topic.
Yeah, happy to do that. Thanks for having me here. I guess just to introduce myself, I'm Sanat. I work at Spartan. Spartan is both an advisory team, so we do some investment banking work. We help sort of portfolio sell itself to FTX. Worked with teams like Deribit and Solana, Dapper Labs to help them raise funding. But Spartan is also an investing firm, and I work on the investing side. We manage about 400 million across 3 funds. One is a liquid fund and 2 are venture funds. We have 1 DeFi-focused venture fund and 1 gaming-focused venture fund. And I spend a lot of my time. I'm a huge DeFi nerd. Like that's why I joined crypto. That's what got me excited. I love, and that's why I joined Spartan. And I love spending my time with a bunch of founders, with as many founders working on tokenomics, working on incentive design, working on user acquisition. Yeah, and so to answer the kind of question that was put to us, I will say the rest of the panelists have done a great job, so there's not a whole lot to add. I think I agree with broadly what's been said, in particular what Amitesh had said. I think I'm a strong believer, and that's what led me here as well, that, our DeFi primitives, tokens, NFTs, and generally the concept of open programmable digital scarcity is extremely valuable, and it enables essentially democratization, breakups of intermediaries, and anyone to code finance applications. And I think the same way, as other panelists have said, the internet and software ate essentially every existing industry. I think crypto was the tool that we needed to do that in finance. One other thesis that's big at Spartan and that I believe in a big way as well is that another reason that DeFi is kind of a very viable alternative to TradFi, and maybe this expands the definition of TradFi a little bit, is that our lives are growing increasingly digital. And as I think NFTs were the perfect example of this, where I think profile picture NFTs took a lot of people by surprise. But when you look in retrospect, it seems to make a lot of sense that if you're going to spend 6, 7, 8 hours of your life online, you of course need ways to status your signal online. And if you're going to have a Rolex in real life, I need something to do that on Twitter as well. And increasingly, as that happens, I think crypto tools have shown themselves to be the way to do that in an open and programmable fashion. And I actually think that each successive iteration of what we do with crypto, like gaming is one application, there'll be future applications as well of NFTs, tools, and other ways to use layer ones. And all of those will eventually feed back to DeFi. We've seen already that, the art market is massive in a finance sense. lending against NFTs is going to be equally valid. We've invested in gaming guilds that buy gaming assets, run a balance sheet, and you sort of generate yield on those assets. And as blockchain gaming expands, the need for finance and trading within those will expand as well. And so I think another reason that crypto is perfectly placed to sort of be a viable alternative to TradFi is that crypto makes a lot more sense to be the financial tooling in a fully digital native world.
Thank you, Sanat. I think I'll use this to ask a question. I think I think that for DeFi to grow to $1 trillion, I think there needs to be a way where institutions can come on board, right? If you look at traditional finance, institutions are the biggest participants, right? And I'm not saying institutions are not participating; they are participating. But from your perspective, Sanat, and because I see that you also work with a lot of Web2 companies, right? IBM and others. Do you see a need there where they are kind of waiting on the sidelines for the right product or right risk product for them, where now they then can jump into the DeFi space? And do you also see a lot of other solutions being built from the startups to cater to that market?
Yeah, happy to weigh in here. I think you've touched on a pretty key point, which is a discussion that we've been having internally as well, that, we've got DeFi to 250 billion TVL, and it's obviously insanely exciting. Like, I also remember seeing sort of the graphs on DeFi Pulse when we first hit 1 billion, and it's pretty insane how fast we've grown. But I'd say over the last 6 to 8 months, there's been a little bit of a lull in DeFi. There's, of course, lots of founders building exciting things, but quite frankly, there is an issue where there's a lot of teams that are focused on attracting what I describe as very short-term mercenary liquidity and often funding that via sort of unsustainable liquidity mining incentives. I've played these games myself. I enjoy them, but increasingly we think that what it's going to take to get from 250 billion to, let's say, 2.5 trillion, which is the next 10x, is not playing the same money games and focusing so exclusively on this very hot ball of crypto money that kind of moves from chain to yield farm. So on that end, there's definitely, I think DeFi needs to refocus on how to access significantly larger pools of capital, if not many more users. And I think you touched on a great point, right? Like 250 billion is exciting, but there are US hedge funds that manage 250 billion. We're still the size of one of them. And so on that front, I think there's a few different things that teams are doing and need to do. I think one is, and this was touched on the previous panel as well, understanding ways to integrate stronger with traditional finance allocators. Crypto funds will continue to grow, and that's great. But both from a regulation aspect and from a tooling perspective. So, people talk a lot about UI and UX. And I think UI UX is pretty important to attract retail. But there's another side of UI UX, which is what's important for institutions. And to give you one sort of example, we have decentralized perpetual exchanges that are slowly kind of gaining market share against market leaders like FTX. But outside of the two leading ones, there's a whole number, like there's a bunch on Solana. Historical data is really hard to access. APIs are not readily available. Smart contract security is still a large unknown. And so I think we need to kind of work a little harder to build out the right tooling and infrastructure to make sure that we're in a place where capital allocators that honestly allocate trillions and hundreds of billions of dollars of capital are willing to play in our markets. And that'll take a few different things, like there are tools now, and some of them kind of people claim this is not as decentralized, but markets like Maple Finance, where, you do the deposit side of lending in an open decentralized way, but you have some sort of centralized parties that approve the borrowers, and then we slowly kind of move that process to a decentralized fashion. And I think a lot of those solutions, while they may not appeal to us in the way that Uniswap is so clean and exciting and easy to use and so decentralized, I think we do need to work harder on solutions like that and gradually decentralize so that we can grow DeFi 10x from here. Because I'm not convinced that the kind of money games that have got us to 250 billion are the same ones that are going to get us to 2.5 trillion.
Thank you. I think Amitej, I know you guys are also building like a layer for staking, right? And it is for exchanges, but you must be also looking. I don't know. Correct me if I'm wrong, but you must also be looking at institutions coming in here. How do you see that space growing, and what are you guys building there? What are the problems that you see?
Yeah, I think staking is a very interesting space, right? Probably the it is probably going to be one of the largest markets in crypto, uh, because staking has more or less has become one of the spinal cords of proof of stake networks, and it is going to engulf the entire crypto space. So, as I mean, most of us have seen that there has been a significant institutional adoption in terms of institutions buying up crypto assets, including the likes of ETH, Sol, Luna, etc. And the adoption is growing more and more. If you see even the recent early stage deals in India, a lot of traditional VC funds and also traditional private equity funds are getting into crypto, and they probably own tons of uh, tons of crypto assets in their liquid portfolio as well. Some of the barriers that they face to staking is lack of clarity in terms of regulation, taxation in terms of how staking rewards are treated, and how that kind of hits their LPs. All of these kind of prevent some of these firms from actively participating in staking. And that is the first level, right? Once you start staking your assets, then a whole gamut of reporting, taxation, all of that come in, and then after that there is protocol governance layers that need to kick in, and all the like the matured financial applications that are built on top of staking rewards, like you can probably start building interest rate derivatives on staking, and you can probably build start building uh, higher yield opportunities on top of staking rewards, and sooner than later some of these liquid staking derivatives start entering the institutional, custodial, as well as exchanges realm. And most of the institutions, their points are going to be yield bearing staking derivatives rather than the native staking derivatives. So there is a long journey to institutional adoption of crypto, especially when it comes to staking. And with respect to DeFi, similar kind of so we have observed similar kind of patterns. When I say DeFi, I mean institutional adoption and ownership of DeFi and associated tokens. While majority of them are owning them up, still unclear about how to stake, how to treat impermanent laws, how the reporting, etc. works. Right, all of those need to be in place before you see large scale adoption of all of these and the thriving institutional ecosystem.
Thank you, Amitesh. I think the use cases and the gap that you have shared, I think I'll reiterate the point which was shared in the last panel by Sameep, who was saying that we are too early. So I think to the audience, I just want to say that we are too early still, right? And there are so many use cases, so many applications which need to be built. If you look at DeFi and if you think that, which I think that institutions are going to come, there is a lack of so many platforms which are needed for them. So if you guys are thinking of building, Amit just shared a ton of examples which you can do. I think coming to that topic, one of the important things which I think the industry is agreeing to, that the future is going to be cross chain. There will be multiple chain, and one of the important thing there is a bridge, right? How would you take liquidity, or how would you take assets from one chain to another, where again Ethereum finance and pontoon finance, you guys are working and solving that problem. So from your perspective, how do you see that bridge? And of course, I bridge again, the security is an important part, because we have seen a lot of hacks happening in the past. So how do you see that playing an important role in making DeFi a viable alternative? Because I think that's an important layer which you guys are trying to crack. Please share your thoughts on that.
Yeah, sure, Samir. So, first of all, I really feel that as we were continuing from the previous question, from 250 billion, how to reach 2.5 trillion. Even now, the market cap of crypto tokens is over 1.6 trillion. Still, 250 billion is only staked in DeFi protocols. So, where is the remaining money gone? Like more than 1 trillion crypto market cap is not staked in DeFi protocols. And that is one biggest reason for that, is that we have not built user friendly applications till now. As Sanat was also mentioning, UI UX is very, very important. We have not made it easy for people. Institutions who have experienced people who can actually use these applications and get good returns on their investments are using these applications to stake money, they to get proper returns. But till now, there are very few applications which are actually bringing TradFi, like how to give that good return, like from where will you generate that return instead of just minting some tokens yourself. How will you generate that return by getting those funds from someone else? So banks and financial institutions in the traditional system are very good at it. And when we talk about bridges and cross-chain ecosystem, we talk about cross-chain ecosystem while in traditional finance, it's only different currencies, and every bank has, most of the banks have the capability to convert one currency to another currency. So there is very free flow of currencies in the world. DeFi has this very, uh, I mean, it's very capable that there are no borders in DeFi. When I build an application in DeFi, I'm not building it for India, I'm not building it for UK, I'm not building it for US, I'm building it for the world. So actually, an application which is built in DeFi space can become the biggest bank of the world. I mean, bigger than Citibank, bigger than JP Morgan, but only if I'm able to grow and scale that application to that level. Now, the biggest trouble is that most of the people who are introduced to crypto space, they are introduced to particular chain. Like someone will create a MetaMask wallet only to use Polygon. Someone will create a MetaMask wallet only because they know how to use Binance Smart Chain. So for them, they would have started their journey by buying ETH, by buying maybe BNB, by buying Matic token, by buying AVAX token. So now, if people have their liquidity on multiple chains, how to bring all that liquidity to DeFi? Every time they find a good application, or I mean, they find an option to earn better return, they will have to move their tokens cross chain. So you have to build bridges so that it's possible for users to move their liquidity from one chain to another easily, fast, and in a cheap manner. So when we built the bridge, our major focus was not B2B space. Our focus is retail. So B2B is there, but most of the bridges are focusing only on B2B space. They're only focusing on projects. They're only focusing on market makers. That those projects will move their liquidity and lock their tokens and increase their TVL. But to be honest, I mean, who is working for the retail customers who want to move, say, their tokens from ERC20 to BEP20? So we have built a bridge which is fast, which is cheap, which is, I mean, and I really feel that just being completely decentralized is not going to solve all the problems. Especially in the space of trade finance, in the space of decentralized financing, there has to be a combination of centralized plus decentralized. So the bridge that we built has a component of CFI plus DeFi. That's why we have been able to make it fast, and to make sure that it is secure, we have kept a element of moving the liquidity outside the bridge, so that we can make the liquidity keep the liquidity safe. Because DeFi, the biggest trouble that I've seen, not just for the bridges but even for the staking protocols, the biggest risk is security. If you're able to sustain your protocol for long term, it is bound to become big, because people understand the utility that DeFi is bringing. So it is bound to become big only if you are able to keep your protocol safe. So security is a very big concern in DeFi space, and we really want more discussions to happen on this side. How to ensure that DeFi becomes more and more safe? Do we bring an element of centralization? Do we bring an element of multi-sig wallets? Do we bring an element of cold storage, so that somehow the liquidity which is getting stored becomes safe? So that is where we want to more focus more. Our focus is on bringing better user experience, making DeFi more safe. If you are able to do that, then using the bridges, using the various protocols that we have, people will be able to, and obviously not just the existing TVL that we have, but we need to bring the next billion people from traditional finance to DeFi space, so that the overall TVL can actually grow 10x. That can happen only if people start investing their, hard-earned savings from banks. They bring it to DeFi space.
That's a great point, Achal. Thank you so much. Venkatesh, you want
Yeah.
to share on point two?
Yes,
Yeah.
yes. So adding to the point of Anchal, there are yes, obviously security plays an important role when it comes to the cross chain compatibility. But again, we also need to understand like a cross chain when it comes whether it's only interacting with the compatible chains or whether it's interacting with the non-compatible chains. When I say this, I'm looking into more of EVM compatible versus the non-EVM compatible chains. So with this said, whatever the cross chains that are currently available in the market, right? They're all into the EVM compatible chains. They're not, I mean, a swap or a transfer of tokens cannot happen between your EVM and non-EVM chains. Even though there are available, I don't see exactly there's a true DeFi by nature which is coming out from a DeFi perspective with this point. So what exactly is this? Like if I have a fragmented issue that has been resolved by keeping a liquidity at one D app or one protocol, and that protocol which serves you the purpose of pushing your tokens or transfer of tokens across any of the EVM chains and across any of the non-EVM chains, and that's how we can get the liquidity combined at one place, which solves the fragmented concern. Coming to the composability structure, yes, we have multiple money Legos that are available in the ecosystem, which can be put across one by one, and then your composability structures is being resolved as well. But the true thing comes only when you cross chain as a security uh, that cannot be gone into the somebody's hands. When I say this, it's like a more of you're getting yourself involved in multiple aspects from a hacker perspective, and then they utilize the money or the tokens that are available in the user's wallet and the protocol's wallet. That has to be taken into a picture, and then you have to go into a auditing part every 6 months or every 7 months, so that to ensure that you are better not compromised on the security aspects, even though if you're building a cross-chain compatibility cross-chain bridges.
Thanks, Venkatesh. I think we do not have much time, and Manav would kick me out. So I will go to the jump to the last question I have. So I think about this that in India when e-commerce came, we don't usually used to trust the websites, right? And then there was a moment of COD. When COD came, then we started. Then the boom of which Flipkart did, right? And the boom of e-commerce came. I think we are waiting for the same moment for the DeFi space where, because I think currently also we trust. I mean, we trust the banks because we trust them that there is somebody we can go back to if something wrong happens, right? But in DeFi we say do DYOR, right? Do your own research. You are responsible for everything. Not everybody is ready to take that responsibility, right? So what are your guys' thought on this? That what do you guys think there will be something which will come which will make us believe that we can actually trust the code, like normal people who do not understand the backend, who might not be able to do the research themselves? What would be that moment where they would be able to trust? And I think we'll go on the back. We'll start in the reverse, Sanat, with you, and then if you can also share your closing thoughts, and if anybody wants to add some thoughts for people who are just starting, right? What should they do? How can they get started into DeFi? That would be great. Sanat, over to you.
Yeah. So to answer your first question, I think there's no magic pill. I think I don't know. At least I don't know of like a COD magic pill that's going to come and solve all of our problems. I do think there's like a few different approaches. I do think we're increasingly in a world where if you interact with financial tools, you will have to start understanding the risks around them. And I think crypto investors are getting better at it. And we're also getting much closer to security best practices, right? Like if you're slightly involved in the space, you start understanding who the best auditors are. We as investors always like to kind of push our teams towards doing as many audits as possible, working with the best smart contract engineers. A lot of teams are also really well capitalized and willing to do some kind of research, willing to do some kind of refund. So those are super important. I also think an area that we're investing in pretty heavily, and next is DeFi smart contract insurance. And I think that actually is a pretty viable path forward over the long term. We're still figuring the specifics of it out. Nexus Mutual gained some traction, but now seems to have kind of stalled. So we're funding a few different protocols where in some way between, and I think in particular, insurance being bought by the protocol may be the way forward. One thing I think about this is that the TradFi system really has its own holes as well. We rely on essentially government-backed deposit insurance where they can print money out of thin air. In crypto, we can't do that, but TradFi has a lot of its own holes as well. I think India is, of course, a much more prosperous and doing well country, but as Ukraine recently showed us, even money that's in your bank account is money that you can access if the government and the bank agree that you can. So there's risks everywhere. I do think, like I said, I don't think there's no magic pill. I think a mixture of audits, more research, better security practices, and insurance will get us there. But happy to hear other views as well. To close very quickly, I think we had a super interesting discussion here. I think all of us kind of agree that we need some new tooling, better infrastructure, and sort of better security practices to help onboard significantly more capital onto DeFi. I think I'm not worried because I think over the past year inside Spartan, I've seen that like the smartest people from Web 2, whether it's software engineers, whether it's executives, whether it's marketers, whether it's graphic designers, like we have so much talent coming on board that I'm confident that we'll basically be able to solve all of these problems. And internally, we know that institutions are always intrigued and they've been coming in slowly. And if they don't, I think the crypto funds will just become bigger than them. So at a broad level, I'd say DeFi will eat TradFi. There's no doubt in my mind. And just to end, I guess I'll add that if anyone's building something, I love to chat with anyone building something at any stage. So please feel free to reach out.
Thanks a lot, Sanat. Amitej, again, I think maybe I am waiting for a magic pill, but I think it's not going to happen. But I would love to know about approaches which people are taking, because we really need to, make people trust that, there are, like you said, there are risks in the traditional finance as well, which we might not be aware of just because we are comfortable, and there are risks in the DeFi, and then we can take a call, which one you need to take and where can you jump. So Amitej, over to you, and yeah, if you can also share your closing thoughts and advice for our DeFi enthusiasts here.
For sure. So I think security is definitely paramount, right? Especially when capital and funds or money is at stake. Uh, so I think protocols, especially some of the top ones, are becoming very sensitive to the security issues. So that's why you see multiple top tier audit firms being choked out of bandwidth, right? And then there are a lot of other freelance auditors and also tier 2, tier 3 audit firms that are getting into this space. There is a joke going on that audit firms are the ones who are making the most in this entire in this 2021, and you could probably see the funding that the likes of Certic and Alban are raising. And beyond that, there are several other platforms like Immunify, etc., where protocols do bug bounties, and freelancers can actually strip through the code and identify bugs or vulnerabilities. So I think it is only going to be a matter of time. And my sense is a lot of protocols and founders and builders are also becoming sensitive to security and the associated effects. So as years pass by, you should see, at least I am optimistic that we should see lesser and lesser hacks and negative incidents about protocols getting hacked or funds being drained out of protocols or rug pulls, right? So having said that, some of the things that builders need to be conscious of is always protecting their, taking the best possible measures to protect their smart contracts. Some basic security practices like key management, ensuring the key contracts admin managers are multi-sig compliant. So all of these are like really hygiene practices, and one needs to keep these in mind even while building the contracts itself. And getting a third party audit done is a no-brainer these days. Beyond that, I do see quite a few opportunities in the security space. for building marketplaces or automating the security practices for smart contracts and dApps and other applications as well. So yeah, so just quickly sharing some closing thoughts on crypto taking over TradFi. I think it'll be a slow journey, but it is inevitable. There will be a long period of time during which both the industries or both the worlds kind of coexist and convergence happens before you see a complete takeover of crypto or DeFi. And I definitely echo some of the other panelists' words here in terms of this being very early stage, and I like to call crypto as internet on steroids. So the pace at which innovation will happen in this space is going to be phenomenal, and because it is borderless and the number of talented individuals building in this space is also quite high. Innovation as well as progress in this space will be quite rapid compared to any other industry. So builders need to be conscious of what they're building, what are their differentiating factors going to be over the next 2-3 years before picking up and building or working on an idea.
Thanks a lot, Amitej. Over to you, Achal.
Yeah, so yeah, obviously there is no magic pill, but if you see earlier we had physical banks branches, people used to go there. Then internet banking came in. Now we have some banks which are internet only, which don't have even any physical branch at all. People still trust those banks. They put in their money over there. So people have started to move towards technology in a way that they're putting their money in technology only banks also. They're doing peer-to-peer lending, and borrowing is also happening in traditional finance. So I have no question about the fact that DeFi will take over, because this when people can trust peer to peer without meeting anyone, they're just trusting that an organization which is registered somewhere will be able to take the responsibility. Then they will be able to trust an algorithm also. The only issue is that the number of hacks which have happened in 2021 and 2020 has been very high. As Sanath also mentioned about the insurance sector, various protocols in insurance which came up, very exciting space. But the only problem is that they're very costly right now. And the reason being that the risk of hack is very high. The more mature this industry will become, the more secure the protocols will be, and the cost of insurance will be reduced over a period of time. As the security will increase, as the cost will reduce for ensuring these protocols, people's trust will also increase in DeFi space. So there is no question that DeFi will grow at some point. I mean, it will take some time. Obviously, the growth that is happening right now also is at a pace much faster than whatever happens in any other industry. So there is no question that it will take over the traditional finance. It's just that everything has to take its own baby steps. So in fact, I would say in blockchain, nothing is baby steps. Everyone is just running. So I'm sure that this will also grow at a very fast pace.
Thank you, Achal. Last but not the least, sir, please, Venkatesh.
Hey, thank you. So yeah, I mean the adoption rate is at a very high speed when we compare it to the 2017, 18, or 16 wise. So nowadays the kind of the advertisement or the marketing these Indian exchanges and other exchanges are providing to the entire world, right? Even the college goers or who are sitting at home because of this COVID situations are much interested in coming to the DeFi world and understanding more in terms of what is Web 3.0, what is the difference between 2.0 and 3.0, understand more on that, understand the financial aspect which was happening earlier and now, and they're adapting gradually to the DeFi world. I mean, when I say into the DeFi world, they're more interested into the crypto rather than going into the old traditional way of visiting banks or getting the stuffs done. So that's how people are getting involved more. And also, obviously, we have multiple options once we buy an asset. So, and the percentage of APY or the APRs is such a huge that people will be always interested to capture those extra tokens or the amount that is coming in through the DeFi world. So, yeah, DeFi will be a true game changer, I can say in this way.
Thank you, Venkatesh. Thank you, everybody. I think that's it. I think you guys make me more bullish, and I feel I am underexposed. I did invest in Amitej Stader Labs through CoinList, but I think after listening to all of you and your thoughts on how this is going to take over TradFi, I'm definitely underexposed. So, but thank you so much, Sanat, Achal, Amitej, and Venkatesh. It's a pleasure to have you, and hopefully we can do much more panels and help the audience. Over to you, Manav.
Thank you, guys. Thank you, Samir. Thank you, all the panelists, for taking out time and talking to our, joining in for the panel discussion and talking to our ecosystem and sharing such lovely insights. Um, Thank you, everyone. We will be opening up for networking, so please stay back and interact with all the panelists and everybody who's here. Thank you, everyone. Lovely having you, and it was a lovely session and an amazing audience, with all the questions and the interaction that you guys have been doing. Thank you.
Thank you.